Let's face it, we all have one goal, and that's to be able to retire one day. And not only retire, but retire comfortably without the risk of running out of money during that retirement period. Because what's the point of retiring, stopping working, if you're gonna have to go back one day? Today we're gonna talk about how to use a life insurance policy death benefit in order to guarantee your legacy. Hi, I'm Olivia Kirk.
I'm Tim Urick. We're from Tier 1 Capital, and we're here to show you how to regain control of your money.
For the best advice on controlling your cash flow, be sure to subscribe to our channel and don't forget to hit that bell to be notified when we upload new videos twice every single week.
I recently had a conversation with a longtime client who had some life insurance set up prior to his retirement. He's now ready to retire, and he called me to discuss his options for his pension. You see, he has a defined benefit pension plan through his employer, and he wanted to know which was the best choice for him as far as leaving survivor benefits for his spouse. Well, the good news was that because he had such a large amount of life insurance, that life insurance will be more than enough to replace his pension without having to take a reduction in his monthly pension. You see, his life insurance is now paid up, and consequently, he has a guaranteed death benefit. He doesn't have to take a reduction in his monthly pension to leave his spouse a survivor benefit.
Leave us a comment down below. How do you plan on using your life insurance policies during your retirement? You see, a lot of times people view life insurance premiums as a cost, not an asset. However, when you have a specially designed whole life insurance policy designed for cash accumulation, it's both an asset as well as a death benefit, meaning you're able to access cash value via the policy loan provision while you're alive and take advantage of those living benefits, as well as take advantage of the death benefit so that when you pass, the named beneficiary receives a death benefit. You see, you're able to purchase a death benefit dollars with pennies, the premiums paid. What this allows you to do is take more risk in other parts of your portfolio, your IRA, your 401k, or your pension plan.
In the case of our client, he had a defined benefit pension for $5,500 per month. However, his wife is a lot younger than him, almost 15 years. So the defined benefit survivor benefit was going to cost him about $1,500 per month, meaning that instead of getting $5,500 per month, he was going to get $4,000 per month. And he said, Tim, I can't afford to retire on $4,000 per month. I can retire on $5,500. What are my options? Well, it was real simple. Because he had a paid-up life insurance policy that he had funded for over the past 20 years, he was in great shape. He had a guaranteed death benefit that would have more than compensated his spouse if and when he dies. So they're able to maintain the $5,500 per month and provide the survivor benefit through the death benefit of his life insurance policy that he would have had to have paid for had he taken the survivor benefit through his retirement system.
Not to mention, because this is a specially designed whole life insurance policy designed for cash accumulation, he also has access to the cash values via the loan provision while he's alive. So if he wanted to control the financing function, let's say for vacation or their child's college education or anything else while they're still living, he has the ability to do so and access that cash value on a tax-favored basis. And you may be wondering, what impact would accessing those cash values have on the death benefit? Well, it's real simple. If you die while there's a policy loan on the policy, it will be reduced dollar for dollar against the death benefit. In essence, the policy loan is just an advance on a portion of the death benefit.
And you see, this really underscores the flexibility and the options you have when you get to retirement. You get to use the money prior to retirement, but now you have options. And those options can help to make your retirement lifestyle so much better.
You see, when you access life insurance policy loans, they're not recorded anywhere for the IRS to see, meaning they don't increase your taxes.
So what taxes will they not increase? Well, there's no increase in your federal income tax. There's no increase in your state income tax. There's no increase in your Social Security offset tax. There's no increase in your Medicare premium, which, let's face it, That's a tax. As well as in most states, the death benefit passes federally income tax free. And in most states, the death benefit passes outside of probate and outside of state estate and inheritance taxes. So when you add up all the taxes that you're not going to have to pay, that's a huge way to make your money go a little bit further.
If you're interested in making your cash flow and your money now and in retirement more efficient, check out our website at tier1capital.com to schedule your free strategy session today. Or if you'd like to learn exactly how we put this process to work for our clients, check out our free web course right on the homepage, The 4 Steps to Financial Freedom. Also, if you like this video, be sure to check out these two. We picked them out special for you.
Thank you so much for watching our video. And remember, it's not how much money you make,
It's how much money you keep that really matters. We'll see you in the next one.